Shifting our focus over to the grain markets, we caught up with Heartland Farm Partners President Jeff Peterson at this week's Nebraska Ag Expo, which took place at the Lancaster Event Center. We visited with Jeff prior to the December crop report's release, but began the conversation with his thoughts on why that report usually does not move the markets too far in either direction. Well, Jeff, we're chatting here at the Nebraska Ag Expo. Of course, a little before we'll get the crop report coming out on Thursday, but what do we typically expect from that report as it comes out in December?
You know, the December report usually doesn't have a lot of surprises, and I don't think we'll see it this year either. And the main reason for that is the production side is kind of put on hold. There will be no adjustments to acres. There'll be no adjustments to yields. Now, we'll bring those back in the January report, but we'll be setting with what we had in the November report. So really all the focus will really be on the demand side this time.
Jeff, let's talk about the corn market. Ethanol seems to be a driving factor there. What are you seeing in the ethanol market right now?
Well, the ethanol margins, they've pulled back quite a bit, but they still are looking good enough to continue to keep the ethanol plants running. When we take a look at since September 1st, how the demand for corn going to ethanol is running, it's actually running ahead of where USDA is projecting. So I think down the road, possibly in the December report, we could see an increase on the ethanol demand side from the corn side. And if it doesn't happen, then I think we will see it down the road because we are far enough ahead of pace.
Let's talk about soybeans now. It seems like exports, we're always watching those numbers closely, particularly for the soybean market. And I want to ask you also about the phase one agreement with China. That is expiring at the end of the year. How closely have you been watching that numbers, and what are your expectations as we move forward without that phase one, at least at the moment?
You know, what's really interesting about that is early on, we go back to when we first saw the phase one trade deal signed, it sure seemed like there was a lot of demand that was showing up on the bean side. But as we're coming into the end of it here, I really don't think a lot of it's going to be focused. I don't think the Chinese demand is focused on where they're at for the phase one trade deal. I really think it really comes back to them and what they need for their feed demand, really for the soybean meal, and also for the soybean oil side for their industry and for what's going on in China.
What do you make of the soybean export numbers in particular right now?
Well, that's one we have to watch very close. And our hope would have been that ultimately we would have seen some additional exports come in. Our shipment pace is good enough. We continue to see the demand side is off where we'd like to see it. And really, what it seems like is that we probably had a big enough crop coming out of South America. It came off late enough because of the late conditions under which it was planted that ultimately China's been able to buy enough that they feel comfortable with what the amount they have. They'll continue to buy some small amounts. They'll continue to keep a very close eye on the weather in South America, but I think their comfort level right now is to say, we'll buy enough from the U.S. to get us through. If for some reason we see some problems coming out of South America, we know the U.S. has soybeans, they'll then come back into the market later, but I think they're going to try to get through with some light purchases.
Jeff, I also wanted to get your thoughts on the wheat market right now. A couple of different factors driving that market. First, conditions. What are you seeing out there here in the U.S.?
Yeah, the conditions continue to be a little disappointing going in, but what we know is that we got to be very careful about judging the size of that winter wheat crop going into dormancy. And what we're finding though is that as we dig into the crop progress numbers, they come out every Monday, and the biggest thing we're looking at there right now is what's the good to excellent rating on the wheat. That would actually be the second lowest we've had going all the way back to 1986. And so overall this crop's getting off to a less than ideal start. The areas that seem to be the biggest problem, we'd have to go up into South Dakota. They've had some conditions up there that's not allowed it to get off to the greatest start. Then we also got to go to the Pacific Northwest, and the conditions are trailing way behind where they'd normally be up there. Now, what we know about the Pacific Northwest is they can pick up some rains and some moistures to get them ahead. South Dakota is a little bit bigger question mark at this time, but so we're gonna have to watch this crop very closely as it comes back out of dormancy is where the key will be. In addition, on the wheat side though, Australia is another thing we have to talk about, and they just continued to pick up more rain than they'd like. That looked like a crop that was going to be 30 million metric tons, which the market and the trade was waiting for out there in the world. The problem is with the higher amounts of rain than normal, their crop is coming off with a lower quality than what we'd like to see. So that's what's given this wheat market a little bit of a boost.
Jeff, I'd like to get to a listener or a viewer question rather on today's program. It has to do with basis. We're seeing strong basis out there, both corn and soybeans. The viewer wants to know, is that a sign that maybe it's a good opportunity to sell right now, or is it a sign that we'll continue to see strong prices for those two markets? You
know, that's an excellent question, and what it does tell us is we just take a look at the basis. So we know that tells us about what's going on the local demand side. So whether you're a crush facility looking for soybeans, whether you're an ethanol plant that's looking for corn, or you're an exporter on the elevator side looking for crops. It's saying because of where the futures price is at, we're just not quite able to get enough grain into the pipeline, so they're having to do the work. So it's telling us about what the actual demand is out there. So overall though, I'd say I'd be careful to say that that means that we're going to continue to see higher prices. The futures market, on the other hand, sent us a signal in that the spreads, the difference between December and March futures, and over on beans, the difference between when November went off and January, those spreads narrowed up, or meaning there was less carry in the market. So that was also indicating the commercial grain traders were saying the demand was real. But if we're going to go higher from here, we do need to have factors coming in that is going to drive that futures market. Just because we've got strong basis and spreads narrowing won't be enough to be able to go ahead and do it. But we do have some of those things on that are happening as we look down to South America.
Jeff, the final word is yours. What piece of marketing or risk management advice would you like to leave our viewers with today?
Yeah, so the big thing is right now is that use this time as you're finishing up your books at the end of the year to know where your break-evens are at. Start knowing what your cash flow looks like, and start knowing when you need to physically sell some bushels. And I would say take advantage of some of the rallies we're having in this market, the strength that we're having in here. If you haven't made much for sales yet, this is not a bad place to go ahead and let some sales go. And as you're starting to look at new crops, start getting those targets together, getting a round of sales off in this area in here just to get started, I think would be a good decision.
Jeff, appreciate your time as always.
You bet, thanks a lot.